make sure that everyone can hear me okay. This is Leonardo McClarty, and I'm the president of the Howard County Chamber. And I want to thank all of you for taking time out of what's been a very busy week, and the fact that we've made it to Friday and it's a beautiful day outside, and yet you're listening in on this webinar. So certainly thank you for your interest and the like. We've got a phenomenal panel that we have assembled here, and it's going to really go through the federal stimulus package and really speak in detail on the new PPP program, as well as also the EIDL program through the SBA as well. Again, just a few reminders. I shared this a little bit earlier, but everyone has been muted. And when we get to the Q&A portion, rather than submit your questions via the chat line, it would be very helpful for us if you would actually submit them via the Q&A. And that will allow us to be able to follow the questions in order, as well as to even see if there's some questions that have similar themes that we can answer perhaps simultaneously. So without further ado, we're going to move forward, and I'll just introduce to you our speakers here. Let's see here if I can advance my, there we go. So our presenters that we have here today, from left to right on your screen: Patrick Sherney, who is with 3PC LLC, and Patrick brings to us over 30 years of banking, having been with what is now Fulton Bank, back when it was Columbia Bank. Also, he's been a market lead with Sandy Spring Bank, as well as First National Bank, and is now in consulting, but certainly brings a wealth of knowledge as it relates to the lending process. Next, we have Mark Sissel, who is president with Katz Abosh, and also Mark is, which is a certified public accounting as well as tax advisory firm that's actually located in Timonium, but has multiple offices in the Central Maryland area. Also accompanying Mark is Terry Grant, who also is a very seasoned professional CPA that works with a host of small businesses on a number of issues, again, related to tax and advisory. And then last, but certainly not least, is Harold Mohn, who is with UHY and heads up their Mid-Atlantic region office here in Columbia. And UHY, again, is also actually a national accounting firm, again, that provides a wealth of information to their clients, again, both in some respects, tax advisory, as well as, again, to certified public accounting. And so thank you for agreeing to participate and share your experiences with us. And so I'm going to move on to the next slide, and I'm going to turn things over to actually Harold, who was going to get us kicked off. And again, I think I've touched on this, but just a little bit of housekeeping. So again, if you have a question, we're going to ask that you use the Q&A window that's typically located on the side of your screen. And then also, if by chance we don't get a chance to cover all of the questions in the time allotted, we'll make sure that we follow those back up within the next 24, 48 hours or so. And so with that being said, I'm going to turn things over to Harold Mohn.
Thanks, Leonardo. I just want to take a couple minutes to just kind of talk about how we got here. These are unprecedented times. I'm sure everybody on this panel will tell you that things change daily. What we thought we knew yesterday changes today. And we're going to go through this presentation with some of the information, but I think we want to spend as much time as possible on the questions and answers at the end to see if we can help make sure everyone's questions get answered. You know, this first started with March 6th. There was an $8.3 billion supplemental appropriations for healthcare agencies, vaccine development, and a lot of other things at the beginning of March. And then we had the Families First Response Act on March 18th. And then the one we're going to focus on today is the CARES Act that is $2 trillion and is a combination of, at least in my lifetime, programs that we would have never even thought of previously and how they're going to be delivered to businesses. Leonardo, if you want to go to the next one. So the CARES Act has some provisions that specifically deal with individuals. So I think you've probably all heard of the recovery rebates that the IRS is supposed to be sending out to folks. It's $1,200, $2,400 for joint filers, $500 for each child under 17. And then it gets, based on your adjusted gross income, it will get reduced based on that, over $75,000 in adjusted gross income for individuals and $150 for joint filers. No one knows when these checks are going to start coming. The IRS website says it should be taking place in about 3 weeks. The folks who may not file tax returns, like Social Security recipients who don't file tax returns, should get their rebate direct debited into their account. And those that normally don't file a tax return may not be required, but would qualify for a recovery rebate. There will be a form issued by the IRS at some point for them to fill out in order for them to get their recovery rebate. Some other components, it changed charitable contributions. So for 2020, those people that normally take a standard deduction and don't get to deduct their charitable contributions will be allowed to take up to $300 for cash contributions. And then for those that do itemize, it temporarily suspends. There's usually limitations on how much you can deduct as a charitable contribution, and these have been temporarily suspended. There's some important provisions as it relates to retirement funds. So if you have to take an early distribution from your retirement account of up to $100,000, there'll be no early distribution penalty. You will have to basically certify or make a statement that you were impacted by the coronavirus in order to avoid that penalty. And then they've loosened up some of the requirements as far as how it's going to be taxed. So if you take out whatever money you take out, if it's under $100,000, you don't have to pay all that tax in the first year. You can spread that distribution out over 3 years. And then if you repay it within a 3-year period, you can avoid paying tax on the distribution when you took it out. It also increases the amount an individual can borrow from their retirement plan from $50,000 to $100,000, and it delays the repayment of any plan loans you have now, delays those payments for a year. And another component of it, it will waive the required minimum distributions. If you're required to take one of those for 2020, it waives that requirement for this year. If you've already taken it, you can actually repay it back so that you don't have to include it in taxable income in 2020. And then there's some additional provisions that affect businesses. There is a worker retention credit that encourages companies that have negatively impacted to retain their employees, providing credits for wages paid to keeping them on the payroll. There's a component that allows you to delay the employer portion of the payroll taxes. So that's the employer portion of FICA taxes. So you can take that and not pay it in during this year and pay it at 50% at the end of 2021 and 50% at the end of 2022. The one caveat to that is that if you get a payroll protection loan and it's forgiven, you cannot do both. You cannot delay your employer payroll taxes and get a forgiven portion of a payroll protection loan. And then also for businesses and corporations, it increases the ability to deduct qualifying cash contributions. Some other items that affect it is it modifies the net operating loss rules, which makes it a little easier to, if you have a net operating loss, in order to offset your business income with that. It relaxes the business interest expense deduction. There's usually a limitation on that, and it increases that limitation. And then one thing they also added to this act was it really impacts a lot of our clients in the real estate world, is that there used to be qualified improvement property, and this would impact commercial buildings that would allow you to qualify for 100% bonus depreciation on that property. That was taken away unexpectedly in the 2017 Act, and so they corrected it in this Act, which allows you to now have that property qualify for bonus depreciation, which is means you can expense the whole thing in the first year. And they made this retroactive. So I know that internally at our firm, we're evaluating all that and what it means in order to maybe go back and amend some tax returns in order to get the benefit of that. With that, I will turn it over to Terry. She will be talking about the payroll protection program.
Thanks, Harold. Hello, everyone. So I'm going to go through some slides on the payroll protection program. But like Leonardo said earlier, these things have been changing on a daily, hourly basis. We think we have some pretty good guidance out there now. So what I'm going to do is go through the slides to give you the general background of the program, and then please send in your questions and we'll address all your questions as we get towards the end of the PowerPoint presentation. So let's start off with the basics of the program. Currently, there's $349 billion available to lend. And this is available to businesses, nonprofits, veterans groups, or tribal businesses with less than 500 employees. Sole proprietors and independent contracts are also eligible. The hotel and food service chains with 500 or fewer employees per location if the company is under the NAICS code beginning with 72. Businesses that have more than 500 employees and meet the SBA's industry-based sigh standards, requirements for the applicable NAICS code, which are based either on the number of employees or annual receipts. So you want to make sure that you fall into that criteria to be eligible to apply for the programs. The loans under the programs are going to be up to 2.5 times the monthly average payroll payments, limited to 10 million in total. And I know there's a lot of questions out there about how that's calculated and what goes into the calculation. So I'm going to go through the basics, and then if you have additional questions, please submit them as we go along. So payroll costs consist of gross payroll limited to 100,000 per employee. It also consists of the employer's health insurance premiums, less any reimbursements, unemployment tax, insurance paid, employer contributions to a 401k plan, and the employer costs for pension plans. Very important, employees that are not US residents are excluded from this calculation.
Hey, Terry, before we leave this slide, there was a question that did come in that is actually probably appropriate just to quickly ask it here. And that was, so we know that the loans are up to 2.5 times the monthly average, but if someone didn't need 2.5 times that average, can they, I guess, take less?
I'm sure that that is something they could work out directly with the bank and take less if they actually want less. The only thing I would say about that is, let's not forget that part of this can be forgiven at the end. So most companies are going to want to take as much as they can and have that forgiven later, because there's so much uncertainty right now as to how long this is going to go on, that I would probably overestimate and try to get as much as you can versus take less than you can actually take.
Terry, I'd agree with you if you don't mind. I think you're 100% right, and I think the worst case scenario is like you said, you don't know what's going to happen in the future, so you might need that money. I read the act as saying when they ask if you need the money currently, or do you feel that you are having issues currently. To me, we don't know. None of us know what's going to happen 3 weeks, 4 weeks, 5 weeks from now. So I would certainly apply for the full amount. And the worst case, even if you don't use it and it's not forgiven, you could always pay it back. And there's no prepayment penalties either. So from my perspective, it's better to take and ask for forgiveness afterwards than it is to not take it and then find out you need it for some reason, and then, oh, by the way, there's no funds available left for you to get any additional money.
And let's not forget, the banks that are giving you the money, they're not really giving you the money. SBA is giving you the money. So there's really not a lot at risk to the banks if they give you more than what you're asking for. And like Mark said, you can always pay it back if you don't need it. One other thing I wanted to mention, one of the other things to be eligible for this program is that you have to have been in business, in operation, as of 2/15/2020. So they're going to ask you on the application if you were in operations as of that date. So payroll costs themselves are measured on the cash basis. So if you're filling out a worksheet to determine what your payroll costs are, you want to remember that that's on the cash basis. You want it to agree with W-2s and payroll reports, etc. It's not on the accrual basis like your financials might be. Payroll costs are measured in one of the following 3 ways. Business was operating at least 1 year prior to the loan. Payroll costs paid in the 12-month period prior to the loan disbursement divided by 12. They have come out with guidance in the application that you can use your calendar year 2019 reports for this. Business is seasonal and in business as of February 15th, 2019. You can use payroll costs paid during the 12-month period beginning February 15th, 2019, or March 1st, 2019 to June 30th, 2019. Divided to get a monthly average. A business was not in business at February 15th, 2019. You will use your payroll costs during the period of January 1st, 2020 through February 29th, 2020, divided to get a monthly average. So there are some calculations you can go through if you're a seasonal business or if you weren't in business at February 15th, 2019. So let's talk about the terms of the PPP loans. A portion of the loan can be forgiven, and we'll talk about that later. Interest rates, when we did the slides, it was not to exceed 0.5%. That is now changed to 1%. The repayment period, you might have seen early on where it was up to 10 years. they have changed that to a 2-year period. They're assuming that there'll be enough time, will have lapsed, that companies will be back up and running and be able to pay this back in 2 years versus 10 years. There's a deferred payment period of 6 months. However, during that 6-month period, interest will accrue. There are no prepayment penalties, no collateral is required, no personal guarantees. You need to apply for the loan through an approved bank or institution. Not all banks handle SBA loans, so you have to make sure you're dealing with one that does. If you have an economic injury disaster loan, this can be refinanced into the PPP loan. Okay, so during the application process, there are certain certifications that you are going to need to make as the borrower of the funds. And these are very important in that they will protect, they essentially protect the lender. SBA will not fault a lender for getting information from a customer that was not correct. The SBA has the ability to go after that customer directly if they do not provide appropriate information. So during the application process, you're going to certify that the uncertainty of certain economic conditions makes it necessary the loan request to support the ongoing operations of the eligible recipient. You're going to be acknowledging that funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. You will provide to the lender documentation that verifies the number of full-time equivalent employees on payroll and the dollar amounts of those payroll costs. The amount of covered mortgage interest payments, covered rent payments, and covered utilities for the 8 weeks after getting this loan. Loan forgiveness will be provided for the sum of documented payroll costs, covered mortgage interest payments, covered rent payments, and covered utilities. The SBA has come out and said that 75% of the loan proceeds need to be used for payroll costs. The other 25% can be used for the other covered expenses. So you're going to have to keep track of your payroll costs and the other costs that you're using the loan for, and make sure that the other costs are not exceeding 25%. So allowed uses, as we were just alluding to, are your payroll cost, payment on interest of any mortgage obligation that was in effect prior to the February 15th, 2020 date, any rent from leases that were also in effect by that date, and utilities. Interest on any other debt obligations that were incurred before that date will not be an allowable use. Loan forgiveness calculation. Okay, so this calculation of the amount that will be forgiven is going to be limited to whatever the principal amount of the loan is. You're going to look at the 8-week period that from the date that you received the loan through 8 weeks after that. You're going to include your payroll cost, as we defined earlier, your rent, your utilities, and your interest payment. This forgiveness amount will be reduced by 2 factors. One is if the employer has less employees compared to certain prior periods, there will be a reduction in the forgiveness of debt. There's not a lot of clarification as to how that's going to be computed yet. So more to come on that. If the employer reduces salaries by more than 25%, both reductions have specific calculations that will be further detailed, but that will also reduce the amount that will be forgiven. This forgiven amount, which is what makes this so beneficial, is that this does not become taxable income either. So the debt forgiveness is forgiven and there's no taxable income to pick up as a result of that. One other clarification that has come out in regards to payroll cost. There were a lot of questions that have come out as to whether or not subcontractors can be included in payroll cost. And we did get some clarification that the subcontractors will not be part of the payroll cost. So there's also the rehire exemption. The forgiveness reductions will be removed if the employer meets these two requirements. If they rehire employees that they laid off or fired during the period February 15th through April 26, 2020. And if they restore up to 75% of employees' salaries that were reduced in the period from February 15th through April 26. Both requirements need to be met by June 30th of 2020. So if they laid people off or fired people, but then they brought them back in before that June 30th date, then you can include their payroll in that forgiveness of debt. So here's just to kind of sum things up a little bit. Here are some pros and cons of the Paycheck Protection Program. Most industries with large employment base will be the largest beneficiaries of the program. Potential for large forgiveness of debt if the company can maintain comparable headcount prior to periods and uses proceeds for allowable expenses. Expected streamlined application process will, with limited credit approval, more details to follow. So it's going to be good for larger employees. The forgiveness of debt and the streamlined process is what makes this so attractive. Some of the cons are that you are limited to just the payroll costs, rent, utilities, and interest. You can't use this loan for anything else. If you have an inability to maintain your employment levels post-loan, that will have an impact on your forgiveness of debt. And the receipt of current loan will disqualify recipient from getting any employee retention payroll credits. So if you're getting if you're using the PPP loan, you can't also then use the employee retention payroll credits. It's one or the other. So that is the overview of the Paycheck Protection Program. And I don't know, Leonardo, if we want to take questions now or go right into the economic injury disaster loan with Patrick.
I'm thinking we go right into the EIDL with Patrick, and that way we can kind of talk how the two compare, because I know some of the questions that are being asked are, I think they're still, and we can easily understand some confusion pertaining to the two programs and which one again goes directly maybe through the SBA versus which one may go through a lender, which one is forgiven, which one is not, and so forth.
Right.
So maybe we just stay right here while we're talking about the two loans. And I guess I'll maybe as a segue, we'll ask Patrick if there's anything he may want to add just as it relates to the PPP, because I know you've been doing a series of webinars on these different loans as well as others. And so anything you would add as we make this transition?
Thanks, Leonardo. Yeah, I've been conducting probably 16 or 17 Zoom Q&As all week. And it's been amazing, the questions that we've been getting. As a lender, I was a lender for 30 years, and I don't recall ever making the trifecta loan where there was no personal guarantees, no collateral, deferred payments, and the loan was forgiven. I mean, it's more than a trifecta. It's unbelievable. So this PPP loan is really amazing, and we're going to come back to it, because the one we're going to talk about now, I've been using the example, like, you know how the old saying goes, you brought a knife to a gunfight. Like the PPP loan is a gigantic, sorry for the illustration, bazooka. This SBA small business economic injury disaster loan will help some people, but it won't cover all the problems. So I think in the Q&A, we can talk more about the PPP, but that's where all the power is. But this program has some nice things to it, so we can jump into it. So of course, all of us are doing something different than we did 4 weeks ago, and we're doing it differently. Of course, I'm here at my house, and of course, my dogs are under control, but somebody is vacuuming. Just, what can you do? So, you guys have all probably had experiences doing Zoom calls or conference calls, and this is just the new normal. So we'll see how it goes. Okay, the thing, Katrina, pretty awful time, but as a point of reference, the Small Business Economic Injury Disaster Loan, it's a government program, SBA, EIDL, has been around a long time. I'm having a few issues with my computer. Can you just kind of gut check me here, Leonardo? Am I coming across okay? Am I delayed or anything?
Just slightly, but the audio piece is just fine.
Okay, I apologize.
Yeah, but audio-wise, you're fine.
Okay. So that disaster loan is regional. It's been around a long time. Think about a hurricane. Think about the flood in Ellicott City. That's always been there. And it was only meant to handle so much. And so before the CARES Act was passed last Friday, this is all we had. And so American businesses, including my own, all applied for this program and broke the system. The website blew up. Imagine all of your customers wanting to talk to you at the same time at one particular day. You just can't handle the volume. So that loan is going to come back online. We're going to let you know when it does, because we've got all your emails. And when it does, you can apply. If you had applied before, you're wondering, like, is it in limbo? And the answer is yes, it'll get to you. I want everybody to apply for that loan, because if you get it and you get the PPP loan, we're going to want you to use this SBA EIDL loan and get it paid off in the PPP loan. I know that sounds confusing, but the PPP loan has loan forgiveness and this one doesn't. However, not everybody will get the PPP loan. And that's why I want you to apply for this loan. And this loan you can use for some different things. So we're telling everybody if you are eligible to apply. And I think it's really important. You don't have to take the money. And actually, if you get the PPP loan, you have to disclose if you got this loan. This is a government program. Not that anybody would do this, but if you misuse those funds, things like wire fraud and all kinds of terrible things happen. So you're going to some party and someone's going to be trying to be cute, thinking that they got one over on the government. You can't just do it this way. This is a jobs bill. You can't use money from different government sources for the same purpose. If you just remember that, you'll be safe. So this loan, you can see it's limited to $2 million, which is pretty nice. Other than using like payroll, if you're using it for work, fine, you don't have to, it's not going to conflict with the PPP loan. They'll help you with some current obligations. Thing about this though, not as generous. Over $200,000 you have to personally guarantee, and if you have real estate, they're going to take it, your house or whatever. Not a big deal for me as a lender, because we always try to take, but you may not want to have to pledge that. So this loan's not nearly as good. And I was so busy in the chat answering questions earlier. Did we go over this $10,000 advance grant? I can really hit that because that's where the money is. You want me to?
We did not touch on the 10. Yeah, we did not touch on the $10,000
Okay.
grant.
All right, everybody needs to listen to this. If you're like multitasking right now, stop. This is $10,000. Everybody that I've asked that has applied, including myself, said that this program took about 10 minutes to apply. It's part of the SBA EIDL loan, but that system blew up because everybody crashed it. So the government said, we're going to get some money into your hands. It's sort of like all of the businesses across the country are trying to get money out of this SBA EIDL program. They're like children in a shopping cart in the grocery store screaming. And so what do you do as a parent? You shove something in their mouth. Hopefully you're in the fruit section and something healthy. And so the government said, we're going to give you $10,000. They actually built a website. I think a millennial must have done it because it's really good. It's like 10 minutes. And as long as you're an eligible business, doesn't mean if you're qualified, eligible, you know, you're not a gambling institution, and they walk you through the eligibility. If you're an eligible business with under 500 employees, if you're a nonprofit, I sit on the board of a nonprofit, many people do. Tell your nonprofit friends, everybody should do this. My son is a gigging musician. He applied. Doesn't mean you'll get $10,000, but here's what they're telling you. You have to just answer some basic questions and then give them your bank routing number and your checking account number, and they promise that the money will be in your checking account in 3 days. This went live on Monday. I don't know why it's not on the national news, right in there with everything else. Every business should apply for this. I applied Monday, today's Friday, that's more than 3 days, money's not in my account. I'm guessing the government is sort of like dog years, so maybe it's gonna be 21 days, I don't know. But I want everybody to apply. There's not a lawyer that can make $10,000 in 10 minutes on their billing. Not even an accountant during tax season can make that much, right, Mark? Maybe. So when you're done today, get a cup of coffee. I wouldn't advise a cocktail. I want you to think straight and do this. It's really important. We've got the links to it. It's $10,000. If you don't get approved for the loan, this is going to blow you away. You still get to keep the money they give you. If you use it for the intended purposes, you cannot scam the government here. This is not a way to get free money illegally. Legally it is, because if you use it for payroll and certain expenses, you don't have to give it back. That money, when you apply for the PPP, that loan forgiveness, they're going to count this towards it. This is an incredible program. We're telling everybody to apply. No one believes us. It almost sounds like I'm doing an infomercial and there's going to be an 800 number and I'm going to sell you not one, but two steak sets of steak knives. I really want you to apply for this $10,000 and all the nonprofits. It's amazing. And that goes right to the SBA. And that website is working, but if history repeats itself, it will break. So I hope it doesn't. Please apply. You will not get anything other than, hey, we got your application. I've gotten no response since. I'm just waiting. But I don't mind waiting for $10,000 because I need to pay for some stuff. And my guess is you will too. If you have a multi-million-dollar business, this will not change your life. But $10,000 in 10 minutes, if you are qualified and it's for the right reasons. I've been getting emails from business owners. One lady wrote to me, she said she was shaking as she wrote the email. Her revenue went from $90,000 a month to zero overnight. The government knows you're screaming and need help. We're trying to do something. Please apply. That's it. So if you do get that loan when the website comes up, it's pretty good. 3.75, 2.75 for a nonprofit. A lot of nonprofits are freaked out. Should they take on debt? Should they not? That's a board decision. As a lender, the first question we always asked when you wanted to borrow money was how much? And then the second question was what for? The SBA does not ask you how much you want to borrow. They're going to determine it based on the financial information you give them. So when that website comes back up again, we'll let you know, apply for this loan. If you get it and you get the PPP, you're probably not going to use this one, but you need to have it as a backup. There's no prepayment penalties and loan forgiveness, no forgiveness opportunities on this one. You got to pay it back, but it's pretty good. It's a pretty good loan. Some people said, well, my payroll is one thing, but you know, what about other issues? I need other monies. That's the program for you. You can see the pros and the cons there. Credit. On this one, credit score has to be 575. On the PPP loan, I don't know what the banks are going to do. I don't know what kind of credit check they're going to do. There's going to be some people that cannot get the PPP loan. That's why I need you to apply for this. The downsides, the loan amount may not be what you need. You got to personally guarantee it, but that's the normal world. Some collateral could be is already pledged. It might be a problem. And the application process right now, it's blown up. So they'll bring it back. Stay tuned. This isn't going to be over in a week anyways. We're in for a little bit of a long haul here. And I like to tell everybody that a meteor has come through the atmosphere and blown a gigantic hole in your business. And between this SBA EIDL loan and the PPP loan and some of the state programs, it is not going to fill up the hole, but it will do a lot of good. It's a really good program. Okay, we're good there. Thanks, guys, everyone.
Thank you, Patrick, and as well as Mark, Terry, and Harold. And so, excuse me. Now we get to the fun part. And so we've got 57 questions here lined up. I think several of them, when I open it up, we've been able to touch on. But I'm going to just start. Yeah, see, I think here we've answered about half of them already. And so one question speaks to us overall to unemployment and additional benefits related to unemployment. And so I guess I'll just open that up, not to any one particular person. I guess as I'm looking at the question, it just says, when do we receive unemployment additional benefits? So I'm not exactly sure there, but does anyone want to maybe touch bases, touch on that?
I think, if I'm right, Leonardo, that the unemployment, even the federal portion, is going to be administered by the state. The funds will go from the Fed to the states. And so that if you apply for state unemployment and qualify for state unemployment, you would qualify for the federal unemployment as well. And I believe the other thing is, if the states, if I read it properly, if the states waive the 7-day, I believe it is, waiting period, then the feds will also do the same. So the point is to get the money into the hands of the unemployed individual ASAP. I don't know if anybody has anything else on that.
Okay, so another question we have, and this relates to, in terms of covering employees that perhaps have been laid off, does it also count if those employees were all, I guess, on reduced hours? This says, does this count for employees that are on reduced hours? I'm thinking it counts for just ultimately any employees that you have on your payroll, whether they were part-time, full-time, what have you. If they were working for you during the period that we touched on, then ultimately as a business owner, you're then eligible to count them in your documentation. Is that correct? Terry, I think we unmute you. Okay.
So if they are referring to the PPP loan, then it does include all employees, whether full-time, part-time. I believe it's anyone that's worked more than 30 days.
And so this next question is, if your employee base increased significantly since 2019, how do you request adequate coverage as 2019 payroll would not capture the current workforce? So I'm thinking if you grew in 2020,
Yeah.
Then how do you capture that additional workforce or the current workforce?
Yeah, Terry covered that. You have one of two options to choose from as far as the period covered. You can do January 1st through February 29th of this year. So if you've already ramped up, or you can take last year. I had the dates in my head earlier. Terry, do you remember what the period was?
You can use the calendar year 2019 or the 12 preceding months.
The U.S. Chamber of Commerce has put out a document that said you can actually, if you share, I share my screen, I can show it to you. Can I do that? Can I do that, Leonardo?
Yeah, you should have the ability to share your
Now,
screen.
this is not the legislation, but it's the U.S. Chamber of Commerce. Not that they're Leonardo's boss, but it sure would make us look bad if this is wrong. So,
Now, well, I will tell you, more than likely, with the resources that they have, and they have been a tremendous asset for us. Half of the things that I share, oftentimes I'm sharing links that they provided just because they're on the Hill, and they've got a big enough staff that they can dedicate the resources to be able to.
well, I'm gonna share it. I'm gonna share it then. So, right here is the answer to that. It says when you're doing your payroll, you can either take your average number of FTEs per month from February of 19 to June of 19.
Right.
But if you've ramped up, this is where they're helping you. Hey, January 1 of 2020 to February 29th. Because a lot of people are saying up until 4 weeks ago, life was different. You know, we were all ramped up. How do I get help? So that's why you have that. And then if you're seasonal, they give you some options down here. And so maybe Leonardo, you could put a link to the U.S. Chamber document. I like it because it's a lot of pictures, and that helps. So like payroll costs, they list what's included and what's not, and I'll leave that up for a minute.
You need pictures, man. I know that.
I do, because I read like hundreds of pages of documents, and most business owners, they want a 1-pager, maybe 10. And the chamber, U.S. Chamber, put out a 4-pager. I love it. Big print and pictures, Mark.
Yeah, that's a good document.
Okay. So this is really good. So we'll send this out. I know everybody's trying to like read it. They're like, hey, how does that work?
Yeah, and actually what I'll do is there's a link where on the U.S. Chamber's website where they have I actually think it's uschamber.org/coronavirus. But again, don't take my word for it. But ultimately, I'll make sure that when I follow back up with the PowerPoint that's been provided here, that's included. And there's a lot of great material there.
Yeah,
So
I stopped sharing my screen. You can take it back.
all right. So next question is, this is specific to an automobile dealership. And that is, can floor plan interest be used in the forgiven amount part of the interest calculation?
Why wouldn't it be?
Yeah.
The
I
loan.
believe any interest of any loans you had prior can be used to offset it.
I would think so.
3 out of 4 agree. I don't know about Mark, but you know.
I would agree. I would agree if it's for business purposes that it would qualify.
Thank you, Mark.
And I believe this was touched on, but I'm going to ask it again just to make sure that there's clarity for those that might have missed it. And that is, if you've already submitted an application under the disaster relief or the EIDL program, should you also submit under the PPP, or is that duplicating effort?
I tell everybody this, we don't know what the world looks like. Submit to all of them, but you cannot double dip because you don't know what you're going to get approved for. So submit them. And then if you end up taking money under the SBA EIDL program and you use it for payroll, and then you try to do the same thing under PPP, you're going to get in trouble. So, but go ahead and apply, because you may need to use that SBA for other purposes besides payroll. So, but you know, I'm not advising people to take on debt at the moment if they don't have to, unless it's for some people, it's either debt or death. If your business is debt or death, that's a different decision than if you're sitting on a ton of cash, you know. So every business is sort of like in a hospital triage. Some people, their heads are exploding and they need something now, and they need to maybe defer payroll taxes. If you don't have to defer payroll taxes, a lot of accountants would tell you to wait because of the issues it's going to cause with PPP. So you got to figure out, I like using metaphors. You got to figure out what kind of patient you are right now. I've had a lot of the people I talk to, it's a bloodbath. It's awful. It's just awful. And I just want to say to everybody, I feel so bad for what you're going through as a business. This is really difficult, and everybody needs to help each other out right now. We're all going to remember 10 years from now who helped each other. So once you kind of can figure out your own situation, you know, put a ladder out to somebody else too. So that's just a public service announcement. But I'm getting the emails, man. It's crushing. It's over.
Yeah.
I know you guys are getting crushed out there.
Thank you,
If you
Patrick.
already have the EIDL loan and you get the PPP loan, you can refinance that EIDL loan into the PPP loan.
Yes, you can,
Correct.
because you got loan forgiveness. But the loan forgiveness is only going to calculate the payroll. Then it becomes a loan. The problem is that the SBA loan could be a 10-year loan possibly. The EIDL loan, we just got direction last night from the SBA. It's going to be a 1% interest rate, and it's going to be a 2-year loan. So some people might think, oh, I'll just refinance my mortgage into this thing for 1%. And that mortgage is due in 10 years, and now it's due in 2.
Ew.
So check with your tax advisor, please. Don't try to get, okay, let me just say it this way, and this is not an insult to anybody. Don't try to get cute. This is an emergency program. You know, use it for the purposes intended. And if you have specific questions, like, be wise, like your accounting professionals can help you, your bankers can help you. You know, get some advice.
And so this next question is related. I guess if you're an employer and then your employees are eligible for the individual part of the PPP, which is the $1,200 checks that we've been hearing about, or the $500 credit for if you have children at home. Do you pay tax? I guess, do the employees pay taxes on this, and or is it included in the tax, I guess, for 2020? So I guess maybe I'm wondering if this person is asking, is that considered part of income for 2020? That it just says if.
So you talking about the rebate checks? I don't think
it's
they're
the
included.
rebate.
Yeah, I don't think they're included in income, no.
Okay.
I've not seen anything to say they are.
Okay.
Mm-mm.
And then this next question, because I know there are a lot of independent contractors and
Hey, Leandro,
yes.
before you move on to that, this is related. In the tax code, loan forgiveness is usually taxable, but apparently, and you accountants can double check me on this, when your loan's forgiven, that free money on the PPP program is not taxable.
That is correct. That is correct.
So this next question says, if you are a solopreneur or independent contractor, what information should you compile reflecting income?
Well, if you're a sole prop that doesn't have any employees, I'm not talking about 1099s now. And Harold, Terry, correct me if I'm wrong, but basically what you look to is your net self-employment income. And that would be counted or calculated the same way you would calculate it for an employee of up to $100,000 on an annual basis. Of course, then you have to take the average per month, divided by 12, plus the benefits. So if I understand the question correctly, if sole proprietor A does all the work, him or herself, doesn't have any employees, has, let's say, some rent and some lease expenses and some interest and, you know, automobile expenses, et cetera, and they net, for argument's sake, $60,000 a year, then they would get it divided by 12. That would be $5,000 times a 2.5 to get to that calculation, and that would be what they would qualify for, plus any benefits that they're providing for themselves, as I understand it, including retirement benefits. If that individual is a sole proprietor that has no employees, that, let's say, at the end of the year has $200,000 of profit, they would be limited to $100,000 on an annual basis. Then the average, of course, of that, plus the benefits.
Yeah, can you guys see my share screen? It's right here.
Yeah, I was, and so Mark, you'll be happy to know that everything you said, Patrick was underlining with his with his cursor. And once again, it was courtesy of the U.S. Chamber's website. And so again, I think as we touched on it, that is an invaluable resource.
Yeah.
And so definitely want to just continue to just sing their praises, to go and check that out. Again, it answers a lot of these questions that as I'm scrolling down this Q&A, that many of them get answered there just with some of the graphs. Go ahead, Mark.
Leonard, I was just going to say also for the benefits, and we've encountered this. I don't know if this question's been asked or if it would apply to anybody on this webinar, but just in case, if you have a self-insured health insurance plan, then the way we understand it is any benefits that you've paid out plus the administrative cost of administering that plan would be your health insurance benefits. So there are a lot of employers that do have self-insured plans versus just a straight monthly premium.
And speaking of, while we're talking about employees and insurance and so forth, a few questions that tie into that. One, I guess maybe what's the definition of full-time employee, of full-time equivalent? Is that 2 part-time? Is that 3? Kind of how is that generally, defined? So that's the first question. And then I guess while we're talking about employees, the second follow-up is just whether or not the interim rule, it says that does not appear to differentiate between full-time and part-time employees, and is that correct? And I'll definitely probably turn that over to either you, Mark, or Harold, because certainly I don't know what the interim rule is.
I'm not. I don't know if you know, Harold. I'm not an HR person, but I would assume an FTE would be 37 and a half hours or 40 hours, one of the two.
Yeah. Yeah, and that's the way they equate everything. I've not seen a lot of the regulations that have come out around exactly trying to define that, but it's going to be a calculation that will need to be done.
And so this next question, in terms of the different, I guess this interim rule, and I guess that, and again, I'm just going to state it. It says the interim rule does not appear to differentiate between full-time and part-time employees, and is that correct? Is that something that I guess either one of you may know, or meaning anyone here, or is that one we need to just research and circle back to this person?
Yeah, I think that's one we're going to have to circle back to them on.
All right, so let's see here, going next. Okay, so I'm going to read this question verbatim. It says, is the forgiveness percentage a function of payroll versus payroll, then parentheses year/year, or employee count this year versus last? If they're concerned about rehiring all of their employees as a result of the $600 unemployment insurance supplement. And I can reread the question. I don't know, can you guys see the Q&A on your end? Okay. So
yeah, I'm not sure I understand the question, but I'm going to try and answer it to the best of my ability. My understanding is that if your count is less now in terms of employees than it was in the previous year, and I could be wrong in saying that whatever that percentage is would not be allowed to be forgiven. And I think there's a second calculation that says if your payroll reduced by 25% or more, that also therefore would make the payroll calculation, that amount, unforgiven. Not to say that you couldn't take the loan, but that amount would not be forgiven.
Right. Yes, it's in the forgiveness calculation. Correct.
Harold, does that make sense?
Yeah, I just wasn't sure I understood the question like you, but what you said is accurate.
I don't know if that's what the person meant. I don't know how you can get a thumbs up or a thumbs down for people to know, but.
Well, and I also asked that person, I just responded and said, hey, email me that question directly so we can also just circle back to make sure that is exactly what they were looking for. Or
I see Cole's on the line. Cole, the answer is no. 1099s, we've discussed that. Payments to independent contractors cannot be included in payroll expense.
Correct.
I wanted to take the easy one. Sorry, guys.
And so I think this next question, I think they meant rehire. And it says under the rehire exemption, we must restore 75% of salaries, but what if they're paid by commission?
Commission's included as part of salary.
Yes, that is correct.
Mark, you just take the no questions. Leave the yes questions to us.
Okay, sorry. I'm sorry, you're right.
Go ahead. Why don't we just,
I'm the negative one. I agree.
we just do
Oh,
this?
well, look, in case you didn't notice it, you saw that. Look at this. Did you see it? See, I can do my bobblehead.
Hey,
Yeah,
that
I can do the yes or no
me.
too.
That looks
Yeah,
like me. Give me one.
I got that as a gift.
And so this gets, so this question is also from Cole related to 2019 payroll calculation. So they said if they had an employee in 2019 that left prior to the end of the year or in early 2020, should they delete their pay from their 2019 payroll calculation?
No,
No,
Can't change history, man.
nope.
nope.
Patrick,
Mark,
you
it's
answered a
yours.
no, Patrick. Come on now.
I was in banking for a long time. I can't help but do this. Hold on, wait a minute. Actually, let's just start answering questions with this.
There you go. Yeah, exactly.
So this next question is for my good friend, actually, I thought it was Atara, it says Natasha, I'm sorry, but restoration of employee salaries. It says, will this loan allow her to pay employees for income lost during the statewide shelter in place order? Or is it only for payroll once they are allowed to open again?
I believe that that's what they want you to do, is pay the employees even if you're not open, and that will count towards the forgiveness of the loan.
Agree. I agree with that.
Okay.
And
So
Patrick,
this-
I don't want to steal your thunder, but the answer to Neil is yes, you can apply for PPP and EIDL at the same time. Sorry, Patrick.
Okay. I'm trying to answer questions in chat at the same time. And
I'm just taking the easy ones, man. I'm leaving the hard ones to the brains.
So this next one is, so for two entities that are, can two entities that are affiliated file separate loan applications if all the affiliated entities have less than 500 employees?
That's a hell of a question.
Yeah, that's a
And
great question. I think it's no.
Really?
I think that depending on what kind of entities they are
Okay.
is the answer, right? So
Okay.
if there's specific SIC codes that if you are in the restaurant or hotel world, then you don't have to combine them through affiliation. You can just, each one kind of stands on its own, and then they'll qualify for the loan. But I know we have some situations where companies are backed by private equity firms, and in some cases, they're not going to qualify because they all kind of get rolled up into the portfolios of the private equity firm.
But Harold, let me ask you this then, okay? You and I own two businesses. One is a restoration business, and one is a office supply business. And we own them. We own that. As this person is saying, you know, we really are significantly affiliated, but both businesses together are less than 500 employees.
If they're both together less than 500, they're fine.
Right. Okay.
The issue becomes is if you affiliate them together and they cross that 500 threshold, then they're going to have issues.
Right. The only reason I ask is I think because a person asked if all the affiliated entities have less than 500 employees. That's why I asked.
Right.
Yeah, then they're fine.
That's what I thought. Okay.
Yep.
Okay. Thank you.
There was another question. I think it just moved up the screen, but I think this one, so yeah, I'm going to ask you guys to put your government contracting hat on, because I think this one is pertaining to that. Is how do I record hours paid to employees with the loan, and will it be unallowable under DCAA rules?
Pointing to Terry.
Yeah, hopefully, Terry, you know the answer to that.
We know the answer to that yet.
Yeah.
So I would track that separately, so that if it does become unallowable, we'll be able to easily pull it out for DCAA purposes.
Terry, why would it be deemed unallowable though if you're paying employees that are working on contracts?
Because if they're, for example, they're being paid even though they're not on site doing the work,
Okay.
then you can't bill it to that contract.
Okay.
So I think it's going to depend on whether they can go in and actually work, or whether they're, been told they can't enter a site.
Right.
And there's other ways of getting reimbursed for funds if you're unable to go to a job site because of the COVID-19. So it's probably, I would say in a lot of cases, it's going to end up being unallowable.
Okay. So our next question is, and I'm guessing maybe there's an incompleteness on this question. I'm guessing maybe they're referring to the PPP, because it says, how does this apply to two, oh gosh, it just got more questions that have moved my screen. How does this apply for an LLC, two-party owners, 100% commission-based?
Well,
Again,
the answer, I guess, is really, first of all, you say it's a two-party owners, but do they have employees? If they don't have employees, then I believe it would be just the same way. You're a self-employed person, and you would get up to $100,000 of compensation, again, divided by the 12, plus your benefits divided by the 12, just as a sole proprietor would get. Or just like if these two people owned an S corporation and they received salary, it would be the exact same $100,000 calculation. What I don't know in terms of this question is, do they have other employees? Because if I understand the rules correctly, if they had other employees, they'd be able to obviously calculate for the 2.5 times, plus they would be able to take up to $100,000 each for the owners in self-employment income as if they were employees. Does that make sense?
Correct.
What I'm saying there?
I agree.
Leonardo?
I agree.
Okay, you okay with that?
Yeah, and it says here, she also responded, I saw where it said they were a service-based vendor. So I don't know if that further helps, what that means.
Yeah, it's about being self-employed versus being a W-2 employee.
Right.
Okay. So this next question, and I think a number of these have been related to trying to determine, I think, some of these payroll costs. And so in this one, the question was, when determining average monthly payroll costs to be used as the main calculation method for the PPP loan, do they add the average monthly healthcare plan cost, the employer-only portion, and average monthly 401 employer matches? And so again, she said, in other words, is the formula payroll plus health plan cost plus 401k match equals average monthly payroll cost to be used for the calculation?
I believe so. So, Mary Smith is an employee of your firm, and Mary makes $100,000 a year, and you pay $5,000 for Mary's health insurance, and you pay $5,000 a year in matching for Mary. That is 100 plus 5 plus 5 is $110,000. And again, if Mary makes in excess of 100,000, you're still only allowed to use for compensation purposes, including commissions, up to the $100,000. Then you add on the benefits.
Correct.
And so this next question is if anyone could touch on the employee retention payroll credit and how that might differ from some of the programs or things we've been talking about.
Which one is that, if you don't mind?
It's asked by Dan Kramer. Says here, can you touch on the employee retention payroll credit and how this differs? And I'm trying to think, I know for us, I know we've sent a couple of links on some tax credits. Let's see if I can pull it up on my end to maybe see if that's.
I don't know if they're speaking with reference to the FMLA or is this the Social Security, which is basically you're able to not pay the employer portion and pay it in later years. I'm not really sure. So I'm going to.
Yeah, we'll maybe see if we can find something and I can come back to it.
I can look too.
The other, let's see. And this next question was actually, it was a startup question, and it pertained to Maryland, I guess, in terms of processing either business licenses and so forth. I guess whether they're still doing that at this point, or maybe I'll even ask a broad question and just say, what would your advice be for someone that had started the incorporation process, et cetera, only for all of this to take place?
Yeah, I believe they're still processing it. This year they started an online website to be able to do some of that stuff. And to my knowledge, that's still functioning. Like, I believe we're still filing personal property returns via that link. I've not heard that they've shut it down.
And Patrick, just maybe if you could speak to this again, because I think there might be, perhaps, I don't know if there's some confusion on it, but just going back to the EIDL and the $10,000, I guess we'll say upfront grant that if you're approved for. But again, if you could just speak to that in terms of the EIDL application, because I think there's perhaps some confusion as to, is it separate from the application? Is it one and the same? And the 10,000 is just something that's provided up front. But if you could just maybe just, again, clarify some of the confusion around that.
It's super confusing. Let me make it clear. If the website didn't break and you applied for the SBA EIDL, let's say you got 200,000, they were supposed to give you 10 now. And then when they, like in 3 days, and then finally in 4 weeks or whenever the loan's ready, they give you the other 190. Well, because the system's broke, they're just going to give you the 10 now. And when the system comes back up again, they're going to ask you to apply. So for now, don't sweat it. Just apply for the 10 grand.
And so on the application, or when you're going through, I guess I seem to recall reading this, there's basically a box that you're checking that says, I'm applying for this 10 grand right now.
Yes. Because remember, loan forgiveness is something in the future. So in 6 months or 12 months from now, you're gonna keep great records, and then you're gonna give it to your bank, and they're gonna see what happened during this time. The problem is we don't know what the next 6 weeks will look like. When are we gonna get the money? How much is it gonna be? So we just got to keep really good records. And I'm getting a lot of questions on this. I want to answer. No double dipping for the same purpose. Right. If you take money from the SBA EIDL and you use it for, I don't know, something different than what you use in the PPP. And remember, the PPP is for payroll and certain overhead expenses. As long as you don't cross those barriers, you can have both loans. But if you take both loans and use it for the same purpose, it's going to be a mess. And that's the act. You may not intend to be defrauding the government, but that's what they're going to say you're doing. So people are saying, don't take both loans. Don't take both loans. Apply for both. You don't know which one you'll be approved for. And if you get both, you can make a decision. Take the PPP no matter what, because that's going to be forgiven if you do it right. SBA, EIDL, some people have said, well, I've got a warehouse. It's in the middle of construction. And like, now I'm in trouble. And I'm like, get the SBA EIDL loan to help you.
Hey, can I go back to just a second to Dan's thing? And Dan, I was just trying to research that about the retention credit. The retention credit is 50% of wages up to $10,000 for any employee, which means $5,000 per employee. It cannot be more than that. And it's basically almost an immediate refundable credit in that you would apply for it on your payroll tax returns. So, and it's a refundable credit. So even if you didn't have any payroll tax, for whatever reason, you didn't have any payroll taxes that quarter, you would still get the $5,000 per employee. Or it would just be a reduction of payroll taxes that you pay. But again, the requirements are the same. You were in business, you were in business during 2000. You were operating in 2019, and I guess obviously carrying a trader business during calendar year 2020 as well. The second eligibility requirement, which obviously I guess is people can look at differently, but is whether or not a business has been disrupted. Okay. The first disruption test is that appropriate government authority must issue orders limiting commerce, travel, etc. So that's one. And then there's eligibility requirement number 3. You can't take, as I think Patrick's already said, there's no double dipping. You can't take, for example, a small business interruption loan, which I think they mean by that the Paycheck protection program, or probably even the EIDL as well.
Mark, I also have here that it applies to wages paid after March 12th, 2020 and before January 1st, 2021.
Yes, thank you, Terry. You're right.
So Mark, just to, I was able to, so the CARES Act also this goes back to the employee retention tax credit. So the CARES Act also created a new employee retention tax credit that does not have size restrictions for employers who are closed, partially closed, or experiencing significant revenue losses as a result of the coronavirus pandemic.
Right.
And so I think the question and so that's where that question I think was coming from, because there is this tax credit inside the CARES Act.
Right.
And I have to go back, but I think that's where they were trying to find out, I guess, how this credit perhaps may differ from, I guess, either one of the other credits, or can it be used in conjunction with, I guess, the loan, or?
So in most cases, Leonardo, you're going to want to go for the PPP program versus the credit, because you're going to get, from a business perspective, you're going to get more benefit from it because you get that forgiveness of debt.
Got it.
But if you can't get the PPP, then this would be a good alternative. And this may apply to large companies that have more than 500 employees and aren't eligible for the PPP program.
Right.
And so I know there's still a good number of questions here, just for those that are still on. Another member of the chamber team is also in the process of getting these questions down as well. And so just so you know, we can be able to follow back up. But while we have a few minutes remaining, both Harold and Mark and Terry, I've heard, I guess, as we were preparing for this, you guys touched on something that I don't think we've been able to speak to right now. And that was, I think you shared some thoughts that if you have a client that receives this PPP, how you shared that you're advising them, I guess, to put this money in a separate account for the tracking and so forth. Can you just speak a little bit to kind of why you're providing perhaps that advice and so forth?
Because our concern kind of is that as we're going through this whole application process, the rules seem to change every day. And when we haven't even got to regulations related to the loan forgiveness piece of it. So we're not sure what the rules will be when we get there, at least from where we're sitting. And so my firm is kind of recommending the clients that they actually put this money in a separate bank account so they can clearly prove what the money was used for. For instance, our concern is that if it goes into a regular checking account and it comes in on Monday, and on Wednesday you pay some unapproved expense, they could take a position that you use this money for unapproved reasons and you're not going to get it forgiven. So by putting it in, almost treating it like an escrow account, putting it in a separate bank account, and then there's really no way they can say you didn't use it for approved purposes.
Agreed. You know, and the other thing we don't know, and I don't know if you guys want to comment to this, is let's say the other reason we say use it is, let's say that for the 8-week period following when you receive the funds, you used this money for, let's just say it was all for payroll, which clearly would be forgiven. I think we would all agree on that, because only used for payroll. And then let's say for the next 4 weeks you had a line of credit and you borrowed from your line of credit. And then after that, you were back up and running, you know, and you were able to pay off the line of credit. And by year end, just saying, you know, God willing, you were in decent shape. Okay. As far as I read the rules, if you use the money for the specific outlined purposes in order to be forgiven, regardless what happens after the 8-week period, that money is in fact forgiven. That's the way that I read it presently. Does anybody have any thought on that?
No, I think it is forgiven.
Yeah.
Yeah. No matter what happens, if you use it for these purposes, it is forgiven. They've not. Now, that doesn't mean that tomorrow the SBA isn't going to come out with some rules that say, well, we didn't actually mean in this case.
Right.
So that's what we're all worried about.
Yeah, they've already done that, Harold.
Yes, they've already done
10 times.
Yes, they have. They have, make it
you're
very
right.
challenging.
So we're going to ask, I'm going to fill one more question, and then I'm going to turn it over to you guys for maybe just closing comments. And so this one, and again, gets back to whether or not to apply for EIDL, PPP, but kind of one or the other or both. And so again, this person mentioned being part of, again, another webinar where they thought they were told to make, that they had to make a choice whether or not to go for the EIDL loan or the PPP. And that if they applied for the EIDL loan by March 31st, that they could still apply for the PPP, but after April 1st, that would not be the case. Anything, I guess you guys, I guess, can speak to that? Is that something that's perhaps like one of the, like a new rule change, or just anything you can speak to that? And again, this gets into also some timing, whether or not if you applied before March 31st or after, can you still do both, and so forth?
I've not heard that yet. So here's what I say in times like this: go with what we know, not with what we don't know. What we know is you can apply for both because we don't know the future. If in a week they come out and say you got to do it by April 30th, because what they're probably hoping for is in the next 4 weeks, a lot of the PPP money will be out there, and it'll probably make that SBA EIDL loan more of a non-issue other than the 10K grant. So I would just say apply for both now. Don't use both for the same purposes. Don't unknowingly commit fraud. You know, let's not pack our jails with people that I know that's silly to say, but you know, apply for both. You're not going to be hurt doing that. Just don't use the money for the same purpose twice. That's all I'm telling people to do. We don't know who's going to be approved for what. Many people are saying 349 billion. Sorry, sounds like a lot of money. But there's a lot of, how many businesses are in the US? And you do the math, like what if the money runs out? And then Secretary Munchin said, well, we'll do another round. We'll do another round. Well, you know, I don't know what's going to happen, right? Inflation, like we don't know what's going to happen. Apply to both. And as rules become more clear, follow them. Just follow them. It's really, it's okay. They're doing the right thing.
Yeah, and I think that just one last for the sole proprietors here, I guess, because you've got 2 dates. You've got, for instance, this Friday was when businesses could start applying for the PPP. And I think next Friday on the 10th, I believe that's what I read, that I think if you're a sole proprietor, I think that's when they're eligible. And so one question I think that was, I may have received via email was, you know, is there going to be any money left, or is there that fear that they're, you know, that these funds are going to be exhausted, or what have you?
Yeah, that's a great question. I don't know that we know the answer to it, right? I mean, I had a call this morning at my firm where we talked about that there's talk out there that this money may go very, very fast, right? So it potentially could go in a week, you know, given as many small businesses there are out there. You know, all I can tell you is that I've heard multiple interviews with other folks in the government that just said, you know, we're not going to let this run out of money. If there's demand there, we're going to reappropriate money to make sure everyone gets taken care of.
Excellent. Well, with that, it is 2:58, and so want to be respectful of everyone's time, both those that have stayed on through the end and also our participants here. So I want to thank Terry, Mark, Patrick, and Harold for joining us this afternoon and sharing your insights and experiences. And for those, again, just listening, just know this is truly a fluid process, that things are changing daily at the chamber. As we get various updates, we're trying to provide those to you. We're probably sending emails a little more frequently than we would prefer. But again, it's one of those times where there's a lot of new information that continues to come. We're going to make sure that we follow up with both the slides as well as also with the recording. And then also we'll try to pull together some of these frequently asked questions as well. Thank you all for joining us, and have a great weekend.
Thank you.
Thank you.
Thank you.